everyone, Beth here, Financial Management. Chapter 4, we're going to start analyzing the financial statements. So now that we know how to put them together and categorize them for our managers and other users of our financial statements so that they're more useful, now we're going to analyze them even further to do comparisons for 1 year to year, so you can see 1 year to the next, whether you're improving, doing better, how things are going. But also not even just comparing our own financial statements to each other, but also looking at competitors or even benchmarks for our industry. Okay, so let's have a look. So the reason we analyze financial statements is to ensure liquidity. You'll see that some of the ratios that we do looks at how liquid the company is. In other words, do we have enough cash, so to speak, or assets that can be changed quickly into cash in order to pay our bills that are coming up very soon? Also maintain solvency. Are we going to end up going bankrupt? Do we have enough cash, again, to pay our bills? Do we have net income at the end of our statement of income? In other words, do we have more revenue than we do expenses? The next one is improve productivity of our assets. We use our assets, especially our long-term assets, in order to generate revenue. And we want to make sure that we are using our assets to the highest productivity possible in order to generate as much revenue as we possibly can. We want to maximize our return. Again, we want to have the highest net income possible compared to our revenue. And then to secure long-term prosperity, we want to make sure that we are continuing to be profitable long into the future. Okay, so the first thing we're going to do is look at an example, Modern Industries Limited, and this is what we call a vertical analysis. So as you can see, the percentages are going down, and they're actually using the same format as what the statement of income is. And you can see we're comparing 1 year to the next. We have 2012 and we have 2013. As you can see in the column with the percentages, it's called percentage of sales. So we're taking every number from our statement of income and comparing it to that year's revenue or our sales figure. Okay, so for example, the first one is 100% because revenue divided by revenue gives us 100%. So then we look at cost of sales. What percentage is our cost of sales compared to our revenue? So we take 1.4 million divided by 2.5 million, and that gives us 56%. So our cost of sales represents 56% of our revenue. So let's jump over to 2012. Looking at our cost of sales there of 1.334 million compared to our revenue of 2.3 million, that represents 58% of sales. So our cost of sales in 2012 was higher than in 2013. So again, in order to do the calculation for this one here, it was cost of sales divided by revenue. So now let's look at the gross profit. So now it's gross profit divided by our revenue number. So 1.1 million divided by 2.5 million gives us 44%. And as you can see as well here, do the math just like you would with our numbers, our dollar amounts for our statement of income. 100% minus 56% gives us 44%, okay? So not only is 1.1 million divided by 2.5 million 44%, but the 100 minus the 56 also gives us 44%. So you can check your percentages that way as well. Okay, so we look over here, and of course our 100% minus our 58 gives us 42. So in 2012, we only had a 42% gross profit. So we can do the same by looking at each of our operating expenses, down to our total operating expenses, down to our profit before tax. So for example here, 160,000 divided by 2.5 million gives us 6.4%. So our profit before tax represents 6.4% of our revenue or of our sales. And our profit for the year, we have 3.2%. Okay, so 80,000 divided by 2.5 million. So therefore, the percentage of sales that our profit for the year represents in 2013 is 3.2%. And in 2012, it's 2.3%. So we want to have the highest profit for the year possible, also representing our highest possible percentage. So in this case, as you can see, in 2013, we have 3.2% for our profit for the year, which is also $80,000, which is higher than in 2012. So in 2013, they're actually doing much better than 2012. Another way we can analyze our numbers is horizontal. Okay, so think of the horizon. So horizontal would be straight across. So we're comparing each of our revenue numbers straight across. So we've got 2012 at 2.3 million. We've got 2013 at 2.5 million. So the amount of change, we've got, the formula is 2013 minus 2012. Okay, so 2.5 million minus 2.3 million gives us a change of 200,000. And that's a positive change because 2013 is higher than 2012. And then to find out what the percentage of change is, you would take the amount of change, which is 200,000, divided by our oldest year, so 2.3 million. So 200,000 divided by 2.3 million gives us a percentage change of 8.69%. Okay, and this one here, because we are analyzing it horizontally, do not expect the numbers to add up vertically, okay, like they did in the vertical analysis. In the vertical analysis, the math worked just like it does if you're doing a statement of income. But in our horizontal analysis, it does not, okay, because we're comparing, for example, our salaries for 2013 compared to 2012. So you can see that the amount of change from 2012 up to 2013, you want to take your 820 minus your 763,600 gives you a change of 56,400. Okay, and now your 56,400 divided by the oldest year, which is 763,600, means that there's been a change in the salaries of an increase of 7.38%. Okay, so hope this helps with the vertical and horizontal analysis. We will come back to this and go over some other examples. And another example that we're going to be going over is Eastman Technologies out of your textbook. And not only does Eastman Technologies do the vertical and horizontal analysis on your statement of income, they also do it on your statement of financial position or your balance sheet. Okay. Okay. So we also have, as I was mentioned, different ratios, financial ratios that we're going to calculate. But for now, we're going to focus on the vertical and the horizontal analysis. So I'm going to stop the video here, and go over the example for Eastman Technologies. And then I'm going to give you a couple of exercises to work on to see how you do with those analysis. Thanks, everyone.